Hello everyone, welcome to RiskMinds' first webinar of 2017. I'm Ana Luisa Olenescu, Editor-in-Chief of RiskMinds Insurance. Before we start, I'd like to remind you that we will also be live tweeting this webinar, so you can join in the conversation by using the hashtag #RMWebinar. So today we are going to be talking about how we can innovate risk practices in the insurance space. As all of you may be aware, innovation has been on everyone's minds recently, and usually things tend to evolve rapidly within this space. Risk managers are also keen to engage with new technologies that can give them a clearer picture of the risks they are exposed to. So they have many options on the market, but what is the best strategy to implement? It's been known for a few years now that the Chief Risk Officer has become increasingly involved in encouraging innovation across the risk division, which is why I have invited two of the world's leading insurance chief risk officers to give us an exclusive insight into how they see innovation going forward. Today, I'm joined on the line by Emmanuel van Grimbergen, Group CRO of Ageas, and Wikus Luus, Group CRO at Hollard. Thank you for joining us today. I would also like to remind you, after our discussion, we're going to be holding a Q&A. If you have any questions during the presentation, you can send them to us using the Q&A box on your screen. Now let's get started. So the first topic we're going to be talking about today is what is the role of the CRO in breaking down the barriers to innovation internally? Emmanuel, I know that it's not always easy to promote change within an organization, especially a large one. Is there any insight you can give us into how we can sort this type of relationship when it comes to innovation and innovating the business?
Yes, okay, thank you, and hello everybody. Okay, you know, the way that I look at it is it's a little bit a chicken and egg discussion. It's also, okay, what is the ambition of your organization? And just to put the things in perspective, what I can see is that you can have an organization where they want to be really radical, and that is what I would call a front runner, extremely innovative. Then we can have just a level below an organization where the ambition of the organization and the management and the board of the organization is more an experimental and differentiating type of organization, and there I would call it smart followers. And then you can have an organization where the ambition is that you are more a follower and you do incremental changes. So for me, it all depends a little bit in which type of organization that you are. And I do not give here, on let's say not yet, a judgment on whether it's better to be in the front runner, or whether to be a smart follower or just to be a follower. But depending on where your organization and the ambition of your organization is, I think as a risk manager you need to do and you need to behave in a different way. So if we take now and I will start with the last one, if your organization is more a follower, and again, no judgment on this, there are pros and cons on this, I think then that, okay, the investments and the uncertainty will be lower. If your organization is more, let's say, in the middle, where you try to be more a smart follower, then indeed, okay, the investment and the uncertainty is increasing, and you really need to think about, or to start to think about, okay, do I have the right people into my organization? And if your organization and the ambition of your organization is to be really a front runner, then at that moment it is clear that you need really to make the necessary investment, also in risk management, that you have really the appropriate skills, because the type of risk that you are facing are completely different than if you are more in an organization that is between brackets follower. So that is one is really what is the ambition of the organization, and depending on the ambition of the organization, you need to make more or less investments. And of course, once that you have, that you know where you are, in all the three scenarios, it is clear that the role of risk management is to, I would say to set a sort of playground, to set also the risk appetite that you have, how do you want to approach the innovation in your organization. And finally, what I would like to say, and it is what I also try to do in my organization, is that you have to walk the talk, I would say, and show the example, because I'm sure that you, in your risk function, you are also implementing new processes, for instance, and that there it's important that you walk the talk and show that you respect the rules and the standard of practices that you have put in place. So that's what I would like to say as a start. And so the conclusion is really, or the bottom line is, from my perspective, first of all, what is the ambition of your board of directors? And depending on the ambition of your board of directors, you need to make the appropriate investments.
All right, that's really insightful. And thank you for this wonderful introduction. I'd really love to hear Wikus's thoughts on this as well.
Yeah, sure. Thanks, Anna, and good afternoon, everyone. So just a couple of thoughts on innovation, and then maybe the leadership role that I think that the CRO and or the risk function can play. So just on, I guess, on innovation, it means something different for different people, and I think it's quite easy and limiting to think of innovation as something that equates to technology, but actually innovation is everything that we do in our organization and in yours to navigate through this sea of change that we're experiencing. You know, the world's changing, be it from a social perspective, technology, economic, environmental, or political perspective. So it's our response is that of innovation. And I think it's also important to recognize that the role of the CRO in that innovative environment will continue to be influenced largely by the culture of the organization. So if you are a risk-conscious, a risk-thinking organization, then that's great, and I think that is really necessary in this world of innovation. If you're not, then it's going to be hard for the CRO to play a strong role here. So that doesn't change. I do think that this era of innovation that we're in does provide more challenge for CROs, because I'm conscious that CROs in different organizations tend to do different things. Their role in itself is evolving, and frankly, it's often very dependent on the personality of the CRO, what they do for a day job. And so bringing innovation into that does add complexity, but it's happening. And so, you know, in the midst of all this uncertainty, I think, you know, two thoughts on the leadership role that the CRO can play. I think firstly, it's very important, and Emmanuel alluded to this as well, to be part of the innovation conversation. So to sit there second line and point and challenge the whole time has a role, but that's not the answer. It's making a constructive contribution. It's being part of the idea generation. So actually not looking or staring into the first, second line debate for a change, and actually be part of that. Yes, there is a role for firm challenge and etc., but you've got to be part of the solution. And I think it's a great opportunity for CROs to actually join the conversation and talk about innovation in a way that both improves risk management and gets our jobs done, but also improves business performance. You know, and I think there's multiple examples out there on the role of artificial intelligence, machine learning, and say claims processing, which I think can deliver clear business benefits, but also meet our risk objectives. And the second one is not just be part of the conversation, but actually be an example. So I think in some of the operational areas we look after, so I look after risk management, compliance, and our forensics team. And I think we have to be seen to bring innovation into our operational areas as well. And how do we use analytics, machine learning, technology, whatever that is, in our fraud or financial crime prevention or in our compliance activities. So be both a contributor, but also bring innovation in your own areas. That's my thoughts, Anna.
That's really wonderful, and I really like how you defined, you know, the sea of change and how we're navigating it. And just leading up from that, I'd like to go to our second theme and just ask you, Wikus, if there are any success stories that you can share with us from your organization in terms of innovation.
I would love to believe there's many. I mean, innovation is rife, and you know, there's a sea of change in the air. I think I'm going to address this from how Risk have maybe responded to support innovation as a success story, as opposed to actual successes of innovation, because I think there's many of those. I think what we need to do as risk function, and what we've done successfully, is to create a platform for innovation thinking. So one of the things that we've done is we've actually, because you don't come up with good and lasting innovative ideas by just brainstorming what's the next best thing. You actually got to find the business problem, and you've got to understand the changing environment. So one thing that we did as a risk function is we facilitated quite a lot of work in the organization to help the organization understand what are the key drivers of change. So how's the environment changing that we're operating in, to create sort of a common platform for thinking, which was one of the things that we did. But then secondly, it's not only being innovative in the platform for thinking, but actually in the way that we do work. And so, you know, we see new innovations being deployed throughout our organization, be it through technology, but also sometimes how we develop ideas, products, or new distribution channels, and how we actually go into the market to test that. You know, we're looking for speed to market. We don't want to test things in-house for 9 months and then only go into the marketplace. You're looking for early phase testing. And that put quite a lot of challenge in the risk space. And so we actually had to go and look and review elements of our own compliance risk appetite. And not only that, but actually our actual detailed requirements that support that risk appetite. So the minimum processes and documentation requirements and sign-off requirements. We actually had to go as a risk function and challenge those and say, well, how can we actually accommodate a much more innovative approach to product development and market testing, while still ensuring that we don't bet the farm. We still meet our requirements, but we can do it in a much more nimble way. So, you know, that's kept us on our toes as a function, but it's allowed us to still do our jobs, but actually try and be more flexible and support an organization that's becoming more innovative. So that's what I would share at this point.
That's really insightful. Just leading up from what you mentioned about all these changes in your organization, I'd like to ask Emmanuel about how you can strike a balance between traditional risks and the new emerging risks coming from innovation.
Yeah. All right. So I think that the balance is, you know, the way that we okay, I will give some insight from Ageas, and it is not what it is. But okay, I started the webinar by saying I think that the first thing that you have to be really aware of is what is the ambition of your organization. So you can be, again, just repeating, you can be a follower. You can be a smart follower, so where you try to be a little bit faster and to follow what the others are doing, but really already investing. And then you have more the radical way, where you really want to be a front runner. So keeping this in mind, depending on where you are in the organization, the way that we assess or that we want to behave within Ageas is we put next to this, and we at Ageas, we don't want to be we do not have the ambition to be a front runner, but we want to be, and we have the ambition to be in the second category, which means that we want to be a smart follower. And of course, that's all the challenge to be. When can you claim that you are a smart follower? So I leave this in the middle. But that is our ambition, not to be a front runner, but to be a smart follower. So we really follow closely what is going on, and where we believe that there are some opportunities there, we try to copy and pick the good ideas in what we see are evolving in the market. But then, having defined our ambition, then we next to that we have internally we have in analyzing and assessing the emerging risk, we have what we call a radar. So you have to visualize this as, you know, the radar on a boat. We have different categories. I will not go into the details, but we have there also technology, science, customer behavior. And there we try to identify all the things that are coming and so on. And then we put there, okay, what do we just need to be aware that it is coming, or do we need to analyze already, or do we need to act? And what we can see, and there is, when we do this analysis and assessment, we see that certain elements are really in the part of the radar where we have to act, and there it is important that we identify then the type of skills that we need, and that we then indeed invest in those skills, and that is for me then the circle. The circle is complete at that moment, but it is important that the management committee and the board of directors, that when they have defined their ambition, that at the end they also recognize when certain of the emerging risks are coming into the zone of we have to act, that we do then the investments. So that's one element, and then one or two other elements. I think that's good to also link to innovation. It is clear that all the things that are coming up now require a change in attitude also from management, and also management has to accept that you will have failures. And again, depending on whether you are follower, smart follower, or front runner, the failures will be bigger or smaller. But if your company decide to be a front runner, I think your company has also to accept, and the mindset of management has to be in such a way that they have to accept that you can have also more or bigger failure than if you are a smart follower or if you are a follower. So also the mindset of management is extremely important in all the innovations that are coming to us in the coming period.
Thank you so
So
much
that's what
for
I
sharing
wanted
that,
to say
Emmanuel.
about this. Yeah.
Oh, sorry to interrupt you. No, I was just going to follow up actually, because it's extremely insightful and interesting that you're actually sharing with our audience what you're doing internally and your strategies, and I think they all appreciate it so much. And actually, I was going to move on from that to our final question, because I know that a lot of insurance companies are still confused about what's going to come in the future. You know, what do you think is the future of traditional insurance companies from your perspective, just looking at what's happening now and especially this year?
Okay, so shall I start? Yeah.
Yes, sure.
Yeah. Okay. Yeah. Okay. So you know, at short term this year, okay, there are a couple of cliches stating the obvious. It's clear that the consumers are eager for more transparency. And you know, I was talking to a young colleague a few days ago, and he was saying, why should I pay a fee for something that I can find on the internet? So it is. I think they are. Okay, that's clear that the millennials are has a completely different mindset and way of looking at buying something, completely different than what we have. So consumers are eager for more transparency. Also, they just want to have, you know, a flawless mobile interaction with companies, a digital experience. The other one, and that's perhaps more a little bit from for risk managers and for actuaries, it's clear that people are, or the consumers are more and more looking to individual pricing and not so anymore to a sort of average type of pricing. So telematics is probably a very good one, or also in the health business. If you have a good health, why should you pay more than somebody who has less, but is in a less good shape? So, and it is, we can really see in there, and of course it depends from market to market. Some markets are evolving faster than other markets, but all over the place in one way or another, it's clear that we are moving more and more, or at least the consumer is expecting to have more and more a tailor-made individual price for his product and not anymore a sort of general average price for his product. So that's for the short term. Now on the mid-term to long term, I think that's not an easy one, because do I believe that the market or the insurance market will be completely disrupted? I tend to say I don't believe that the insurance market will be completely disrupted in the mid to long term. I don't believe it. But having said this, yes, there will be big changes, and it is clear that what we see today is that we see a lot of startups. We have the so-called insurtech. We have a lot of ecosystems, but most of those, or at least from what I can see, most of those startups and ecosystems, most of them are focusing on the front end of the process of the value chain, on the distribution part, and I think that the role of the insurance company there, or at least the opportunity for an insurance company is, to team up with those startups that don't have any backlog. They have good customer experience. They have the agility. They have no IT backlog. I already mentioned it. And there, for me, the art is that the insurance company are able to team up, sort of partnership or joint venture with those startups, and to take them on board, because those startups, I'm not aware that a lot of them want to become insurer. And let's not forget that in an insurance company or an insurer, one of the core business is capital. It is extremely capital intensive. You have a heavy regulation, and if those startups has to becomes insurance company, I'm not so sure to what extent they will be able to stay as agile as they are today. I am not convinced that Google or Amazon will become an insurance company. I think that we have seen that some of them have already taken a step back on this. I'm not convinced. That's my personal opinion on this, but it is important to team up with them and to make sure that you can, take where they are strong in, that you take it on board and that you use it in your company. So that's what I see. Hopefully, that gives my personal view. So not a completely disruption of the insurance company, but absolutely quite a big change in the way or that products will be distributed and customer react. Customer centricity is extremely important.
Thank you so much for that, Emmanuel, and thank you for mentioning the hot topic that everyone is talking about right now, which is obviously disruption. And I really like to hear Wikus's thoughts on this, because it's something that everyone's just been mentioning so much. Would really love to hear his insight on this.
Yeah, so I think it's right. I think they are. If you're asking me what's going to change or what's going to be the same, I'm always hesitant to answer because I know I'm going to be wrong. But there's a lot of noise. I agree with that, and I think there are two camps of thought, or two schools of thought, and one is that disruption won't be true disruption, but it'll be incremental change, and then there's a question of whether there will be something that's truly disruptive. And as a business, we've spent a lot of time looking at some of these key drivers of change, and just for talking of a few facts, we've identified approximately 11, what's in our view, key drivers for change, and in our view, approximately 9 of them will change in a way that we think is reasonably known, or the impact, if it deviates from that, is not going to be substantially disruptive. But we have identified at least 2 key drivers where we say, well, the outcome of these are unknown, and the impact, depending on where they end up, is going to be unknown for us as an organization and possibly as an industry. And one of those is actually speaking to this concept of true disruption of the insurance concept as opposed to technological incremental change. And I think there's a lot of noise. I think for the most part, it'll probably be incremental, but I think it'll be short-sighted to stop with our thinking there. I do think social changes, buying behaviors, customer-led change for insurance is the reason for a lot of these startups. And, something like, if you're familiar with an idea like Lemonade, call it community or affinity-based risk pooling. I don't think those are truly transformational, but they are the first step towards a new shape and form of an insurance product and possibly of an industry. I think there are other potential more extreme disruptors. I think something like blockchain. There's a lot of noise around it, but I actually think that concept and linking insurance to that could profoundly change the way in which risks are aggregated, potentially at a global scale, and the way in which they're underwritten. And so I think in that space, we could see something that is actually extremely disruptive to insurers. I think almost not more importantly, but very relevant regulators, and also reinsurers as key players in the market. And actually where capital flows in the insurance value chain from the providers of capital 5 years down the line. So a lot of incremental change, improvements, etc. But I do think that there's, in my view, a strong chance of a major disruption in 1 or 2 areas, although no one has quite cracked it yet. But within all that change, what will stay the same? I don't think too much. I'll close off by saying I hope that we'll need more actuaries for some time, and that remains unchanged. But maybe that's just a personal wish. So I'll leave it there, Anna.
Thank you so much, and thank you both of you, because these are just such forward-thinking ideas, and we're so happy to be together with you and discuss them. And I'd like to just move on to question and answer time. So I want to remind everyone, if they want to mention any questions for Wikus and Emmanuel, you can send them right now, and we'll ask them. Also, I look forward to hearing your discussion, joining Jason Brown, the Group CRO of QBE, next month in Amsterdam at our conference. We seem to have a couple of questions coming in already. So I'm just gonna ask the first question to Emmanuel. So Emmanuel, the public wants to hear about how to overcome the regulatory constraints on innovation. Would you be able to answer that?
So Anna, I'm not sure that I got the question. The regulatory impact on innovation.
Yes, the regulatory impact and the constraints.
Yeah. So, but that's what I. I think in one country, I will not name the country, but the regulator was thinking to a little bit, let's say, make the regulation less tough for some startups, or let's say for new companies that can be categorized in a certain category. Okay, on the one hand, I think it's good because it stimulates indeed innovation, and that we have to move forward and we have to change, and the client is expecting something else. On the other hand, we need to keep a level playing field, and then I think that it's when the startup reach a certain scale, then at that moment it's all right. That's my view. I think it's important that the startup enter into a sort of level playing field. So that's my. I think it's good that there are some relief on regulation for some startups. But let's also keep in mind that at certain point level there should be a level playing field. And just to know that the question is on regulation, and allow me, and it's with a small smile, that I read a few months ago a statement, and I thought the statement is not so bad, that if you look in the US, they innovate. In other countries more to the east, they will copy and they will make it cheaper. And in Europe, and I'm from Europe, we will regulate. And I think there is something true in it. So in Europe, we are quite tough on the regulation.
Okay, we have actually another question from the audience right now for Emmanuel. So the question says, Emmanuel mentioned this hierarchy of followers, smart followers, and front runners. Do either of the speakers have any sense of which is more likely to succeed in the current regulatory and business environment? So I'd like to address this question to both of you. So Emmanuel, you can start, and then we can ask Wikus to follow.
Yeah. But it's okay. I will give my view, and also it's also I think the strategy of Ageas. As I already mentioned, we at Ageas we don't want to be a front runner. So also we are a listed company. We have shareholders, and because when you really want to be a front runner, that means that you have to make a lot of investment, or you have to invest quite a lot, and you can be challenged. I'm not saying that it is not necessary, but you can be challenged by your shareholder whether you want to. What did you do with this money? So if at certain point in time the money that you have invested didn't return any good money back to the shareholder, and therefore our strategy is. We are mindful of the shareholder, but we realize that we cannot miss the boat, and that's the reason why we want to be a smart follower, or we pretend to be a smart follower, and there we believe that at least you are more mindful of the money of the shareholder. You have startups, and then the people who are investing in the startups, they know why they do it, and they know the risk that is linked to it. And then at a certain point in time, it is very important that you as an insurance company, or at least it is our strategy, that we can find out and that we can see with which startup or not that we can team up and partner, and that we can also then, support them, but also get the benefit from what they have, developed in their startup period. So that is our view, and it is our strategy within Ageas.
Wikus, what is your opinion?
Yeah, so I think a mix of those strategies. I don't believe that we as an organization, believe in any one of these in isolation. I think it's one of those cases where you work to your strengths. So, have you got beacons of excellence, if you like, in your business that you can use to be a front runner in the industry? Or there might be something that you're not particularly strong at, that you may choose to be a smart follower, a fast follower. There's specific areas where, not in everything that we do are we front runners, definitely not. But I do think there's a need for that, especially if you want to innovate, I think, at least from a definition perspective. And so, to give you an example, I think we've partnered with a startup, and it's actually ironic because that startup has the potential to disrupt one of our core businesses, but they're not an insurance license yet. And so they may become an insurance license holder down the line. And so, but for us to actually innovate in this industry and almost disrupt ourselves and learn from it, we've decided to do that, and that's a front-running strategy. But there might be other ones around how you decide to roll out your digital strategy, where you may actually be a smart follower or just a follower, where you wait for technology and innovation and development costs to actually come down, learn from others, and then influence and then implement. But you do those in areas where there's not a big risk of being 6 months behind the line, if behind the main wave. I think in areas where there's a risk of being too far behind the wave, you've got to consider being a front runner. So I think it's a balance that needs to underpin your strategy.
Well, actually, just following up, because someone in the audience wanted to know the change drivers that you mentioned. So they'd like some clarity in terms of what these change drivers are. If you can just give a brief outline.
Sorry, is that to me?
Yes. So in terms of the 11 change drivers that you mentioned.
Oh, okay. Okay. Yeah. So
they would like some clarity.
Okay. Cool. So yeah, I mean the main thematics for the drivers are, I guess, similar to the ones that you find in the World Economic Forum risk report. So it's social, technological, economic, environmental, and political. And under each of those, we had one or two very specific drivers. So, I mean, under technology, it's quite easy to come up with 5 or 6 around ubiquitous connectivity, Internet of Things, big data, AI, robotics and drones, 3D printing, new energy. And so we went through each of those and we identified a number of drivers, and we narrowed it down to the 11 that we think are the most impactful for us. Now, some of that is a bit proprietary, but I'm happy to share. I mean, the 2 where we ended up, where we said, A, we don't know where it's going to be, and one, and number 2, we don't know what the impact's going to be, or the impact of variability is quite significant. Those 2 areas, the one is sort of a broad classification of effectiveness of the state. So that's the ability of national government in South Africa to create an environment which is business friendly, conducive for growth, positive economic growth, job creation, a welcoming regulatory environment that makes it easy to do business locally and foreign. So it's looking at 2 extremes on that. So are they actually effective at delivering that or not? Because your operating environment is very different in those 2. And the second one looked at the level of disruption in the industry, with the lower end of the disruption being, listen, we're going to see change, but it's going to be incremental improvement. Whereas on the far side of that spectrum, you're looking at whole-scale disruption on the whole notion of how you pool risk, as an example. And so overlaying those 2 uncertainties, you can create an easy sort of consultant 4-quadrant diagram. And in each of those, you have a combination of either disruption or not, and or high or low state effectiveness. And really looking to develop a strategy that allows you to operate in either of those, not necessarily predicting which one is going to happen, but actually being nimble enough to be able to not just survive in those modes, but actually thrive and potentially disrupt in your own way. So that was sort of at a high level what some of that thinking entailed.
All right. Well, thank you so much for answering that question. Finally, I'd like to go back to Emmanuel for a final answer for a question from the audience related to the smart follower strategy. So an audience member would like to know if the smart follower strategy would work if your competitors are implementing new systems or platforms internally that would enable them to assess risk more accurately. What do you think, Emmanuel?
I think that the question is a valid question, and we internally we had endless discussion about this. Where do we want to position ourselves? And it is a risk. It is a risk that I think I mentioned. Okay, we pretend or we have the ambition to be a smart follower, but it is of course always. When are you the smart follower? So it is. It's a very difficult balance to find in such a way that you make sure that you do not miss really the trend, and that indeed the competitor has implemented some of the new evolution of technology or innovation, and that you didn't follow, and that you miss it, be it in risk management, be it in customer experience, in distribution or whatever. It is absolutely a risk. But okay, you could also say being the front runner is also a risk, because and there sometimes I compare it, to in football, soccer. Okay, you have probably millions of young people who wants to become Messi, and there's or Ronaldo, but there's only one. And okay, so that there are a lot who are investing and investing a lot of their time and their money and their resources to try to get to the super top, but there are only a few of them. And there again, in this analogy, okay, all the art is to be able to follow and to take the good elements of how did Messi, what did he so special to be able to reach that level. So I think that's all the art to be able to spot and to follow appropriately. But the question is extremely relevant.
Thank you so much for answering it. I know the audience really appreciates it. And actually, that's the last question for today, because we plan to continue this discussion in March at RiskMinds Insurance. As you know, Emmanuel Wikus and also Jason Brown will be speaking on a panel during our Disruption, Innovation, and InsurTech Summit, which is taking place on March 13th in Amsterdam. So if you want to learn more about the summit and RiskMinds Insurance, you can check out the link that is now on the screen. And if you haven't joined our online community, be sure to follow our Twitter account at RiskMinds and LinkedIn page RiskMinds. I want to thank Emmanuel and Wikus today for all their time and their input. And I'll see you in March in about a month's time. Thank you and goodbye.
Thank you.
Bye-bye.
Bye.